Hello, absolutely great to have you here. Lately the markets have focused on one factor, almost on one factor only, and that's USD bond yields or US bond yields. And this is why we are also focusing on gold, Dax, Nasdaq and USD today. But first of all, let me show you why you should be interested in these videos. Here we have USD yen in daily time frame. And those of you that have been following these videos, they know that we alerted people to these opportunities around where these green boxes are. So about 350 to 400 pips below the current price levels, we alerted you to the upside potential in these markets. So please make sure you are subscribed to the channel and leave us a comment or a question if you have something to say. We really appreciate your comments and questions. And also, I would love to have you taking and copying the URL and letting your friends in social media know that there is great material available here for free. So I'm sure they appreciate your help too. And please do remember that we don't provide any investment advice. You should be only watching this video if you agree with this disclaimer and with the fact that we only provide you with educational and marketing material. Okay, let's talk about gold first. I'm going to take you to the gold chart in a moment, but first of all, I want to say something important. This helps you a lot. If you go to TIOmarkets.com/analysis on daily basis, you get our analysis for free. And you can subscribe to the analysis emails so that you get all the analysis into your inbox. And okay, here's an example of why you should consider this. On Monday this week, we said that it is our view that bond yields have moved so much lately that a rebound in bond prices is becoming too much of a risk for those holding short positions in bonds. And as you know, you might know that if the bonds are sold, if the prices go down, then the yields go up. And with gold not being a currency or an asset with its own yield, it's going to suffer. So therefore, my reasoning was that this worry is likely to cause buying in bonds, sending the yields lower. So we basically said that if we're correct, and this happens, then we should see a bounce in the price of gold. And let me show you what happened. So here we are, gold rallying over $30 just yesterday. And why was this rally important? Why did it happen here? At the time when the market was trading just above this 1764 support level, that's when we said that if this level is taken out, then the next stop is here between 1671 to 1690 range. That's basically, I'm going to give you the reason very quickly. Here's the historical low, and here's the 61.8 Fibonacci retracement measured from this low to the latest high. And that confluence was enough to stop the slide in the price of gold, and we had the yields going lower, so we got the rally in gold that we expected. So can you really afford not to go to TIOmarkets.com/analysis and just ignore all this good that we provided to you for free? I don't think you can. Just follow this analysis and follow our website and follow our YouTube channel. So what's next in gold? What's likely to happen next? The price is rallying from support, and there is some air between or space between the current price and the next resistance area. Here we have this downward pointing trend line coinciding with this former support, now resistance, and it also coincides with the 50% Fibonacci retracement and the 20-day moving average. So that resistance level looks like quite interesting, quite likely. That's I think if the market rallies there, I think there's a good chance that this is where people start taking profits. Should it rally further, then the next level is, let me just copy this. The next interesting level is up here. So around this, basically there's a reactionary high and 50-day moving average coming together. So around 1816 is a significant resistance there. But at the moment, we are still rallying from here. So the market might consolidate a little bit and then move higher. But if the yields keep on going lower as we expect, then there's a good case for the gold to keep on moving higher. But as I always say, just follow the price action in different time frames and only act if the price action itself confirms your thesis or theory of what's going to happen or what's likely to happen. Here's something really quickly that you, I'm sure, want to consider. If you are trading with us already, I'm sure you're trading with VIP Black account. But if you aren't, then listen to this. Go to your email support@TIOmarkets.com and ask for VIP Black account. And you get razor tight spreads, you get 0 commissions per lot, no monthly subscription fees, and all the other benefits. So I really encourage you to consider this, because combined with the good analysis that we provide, this is a superb package. Okay, and this is Nasdaq. It's another market that benefits from lower yields. And why is that? It's basically because the technology stocks tend to be growth stocks. And for growth stocks, it's very important how much the money costs. What are the interest rates? Where are the interest rates moving to? And now that we have indications that the yields are going to move lower, so it means that the cost of financing is likely to get lower, and this will increase the future cash flows of these shares. So that's why this stock is, or this index rather, is attracting buyers. As you can see, we basically saw a retracement all the way down, or almost to the low of this bull channel here. The market moved slightly below the 50% Fibonacci retracement. But now we have a couple of higher lows here. So this indicates buying coming into the market. And also this 3.6% rally in Nasdaq Composite yesterday was really, I think, the best since last November or so. So it was a really nice rally here, and now the market has important levels here. Let's see where they are. Basically from 61.8 Fibonacci retracement to these sort of to this low roughly. I would say this level here from 12,080 to about 12,270. This roughly is a likely support area. And then the next level to look at is this resistance area here, where we have the both moving averages coming together, and we have this reactionary high and 23.6 Fibonacci retracement. So all these technical factors coming together here and form a confluence area, say from about 13,166 to 13,360. Hey, do you like what you see? Do you feel that these videos are helpful to you? Maybe you can help us too. I really would appreciate if you copy the URL into your favorite social media groups and channels. So if you do that, you put a big smile on my face, and I thank you so much. Thank you. Here's another market that is definitely bullish. This is DAX on daily time frame, and as you can see, there was this bullish triangle that the market now has broken out of. And if we take the width of this channel, or sorry, not the channel, but the formation, if we take the width of the formation and make a projection from the breakout point, we pretty much come to this upper end of this sort of channel that we have here in place. So now, how do you trade something like this? Obviously, the nicest thing that the market could do to us, it would be to give us a retracement back to this level here, to the breakout level. And if we then see the buyers stepping in, then we just buy along with them and just ride the market as far as it goes. But the other option obviously is to find good intraday levels that you think are going to be good supports and then just buy against those or buy breakouts in intraday sort of charts. But either way, this market has definitely upside momentum at the moment. And like always, there's more than one way to trade. So just find the way that suits for you and then never risk too much per trade. Always trade within sort of your financial means. If you put some money on trading account, it needs to be money that you can afford to lose, and then you don't want to lose more than maybe 0.5% per trade or maybe max 1% per trade. And it's only, you know, I sometimes hear people saying I'm risking 10% per trade, but you have to be extremely good trader to really keep your account going if you are trading like that. So 0.5% to 1% only, and then that's only when you know that you can make money. But there's one more market and then we are done. Just a moment. Okay, so this market, USD Swiss, has been running higher. But now as the yields are turning, as the USD yield isn't rising anymore as it used to, this market is reacting to the same fact as like so many other markets we have seen reacting. Yesterday we had a bearish engulfing candle. The close was below the previous day's low and it was a wide range candle, so obviously this indicates weakness. If we get a lower high now, then that's a further confirmation or a confirmation to the weakness seen here. The question is obviously how far the market might move. If the lower high is indeed put in place, then I think there's a good chance that the market probably moves to the next significant level around here, about 218, 20 pips from the current levels. I'm not saying you should be selling this. I'm only saying consider this with your own analysis. If it agrees with your own analysis, then you might consider selling this market. But the next important technical zone I can see is here. We have the 50% Fibonacci retracement, we have the 20-day moving average, and we have this level that briefly held the price down. So I think this zone from about 90.63 or so to 90.96. Here's the first interesting level, and the next level is down here where we have 50-day moving average and 61.8 Fibonacci retracement, about 89.71 to 89.95. So this is what I'm seeing in these markets today, and I wish that you will trade safe, and I hope to see you soon in my webinars and in the videos. Take a moment to leave us a comment. We really appreciate what you think of these videos, what you think about markets. If you have a trading idea or you have a good question that you would like to ask and you would like to have an answer for, please take a moment to type it in and we do our best to help you out. Thank you for your time. It was a pleasure for me to look at the markets with you, and hopefully this helps you in planning your trading. Always trade safe, never trade without stops, and I really hope that I see you in the next webinar. Go to TIOmarkets.com/webinars and register for the next free event. Thank you.